let's also welcome Ajay Bagga, who is joining us on the show right now. Hi, Ajay sir. Good afternoon. It's been a while we connected. Great to have you on the show. Uh,
Thank you.
Ajay sir, help us with your take on the markets overall. And I would like to know that how much of the positives in terms of the Union Budget as well as the RBI monetary policy coming as per expectation you believe is now priced in, and what will drive the markets ahead? Because January month has been quite wobbly. In February, we are seen to be stabilizing a bit. But what's the way forward if we can have your take?
Yeah, absolutely. Delighted to be on your show again. Overall, if you see, two big domestic events have gone up. The Union Budget, I think, on uh, uh, on balance, it was a good budget. In terms of the RBI policy, the positive was the rate cut. What disappointed the market and led to some amount of sell-off in the banking stocks was that.
All right, Ajay sir, please hold that thought. I guess we got you in a quite a patchy line. We'll try to reconnect with you so that we can clearly have your take for all our viewers. But back to the markets then. It's Nifty Bank that is now scaling above. It's trying to recover from the day's lowest point. But a lot of these counters, specifically from the auto pack, are trending higher. Trent is another stock after 8% fall yesterday is trying to recover a bit. Other than that, when we say, then definitely Chambal Fertilizer is one of the top gainers in the FNO side. Trend as well as Dixon Technologies is also making up to the list. But I want to flag off Apollo Tyres as well, because the company on the number front you will see has disappointed drastically. Other than that, what I believe is that given the fact that most or rather the worst may be behind for Apollo Tyres, because in terms of the subdued demand in the domestic market, the kind of inflation we have seen in the rubber prices, going ahead in Q4, the demand outlook looks quite decent, and there has been a sort of a decline in the rubber prices that could actually support the margins of the company. But Naresh, help us with your take on Apollo Tyres, because since the word go, the stock did recover from its day's lowest point. It's very close to its 420 odd support levels. How do you see this?
So the stock has actually given a breakdown of the last 1 year range. 440, 450 used to be the bottom back in November as well as June and March of this year. And we've broken below that. So unless and until the stock starts trading above 440, the trend remains weak. So it could be a whipsaw only once it sustains 440. So for now, it's an avoid. The selling has not been very sharp post that breakdown. So I would expect it to be in a range of say 410 to 440. If that range breaks, then there is a new trade to be done.
So it is just it is just a bit of a bounce that we are seeing on Apollo Tyres is what Naresh believes at this point in time. But definitely, when we talk about the telecom stocks, is Bharti Airtel moving all of the way higher by around 3.5%. But one of the related companies, that is Bharti Hexacom, if we can bring up that stock, that's around almost 11% jump is what we are seeing on that particular counter. Naresh, how do you see this counter? Because we don't discuss this stock very much on the channel, but technically, how do you see the setup of this one?
New listing, just a year of data, but technically, if we look at it, post the listing, it has trended well up. 1250 is a support and 1550 is a upper band where it has made a top few times. Relative strength to the fact we've seen in the whole telecom space also, we've not seen sharper correction here. Same is the case with Bharti or even in Industars. So for now, it looks okay at current levels or on dips rather. A dip back to 1300 and 1350 would be a buying opportunity, and an upside could be back to 1550.
That's the take coming on a couple of these telecom stocks. But Ajay sir, believe that you are back with us. Please go on and help us with your take on the markets, that what could actually, what factors and reasons can drive the market ahead from these levels.
Yeah, thank you. Again, some Wi-Fi issues. Overall, if you see, the budget on balance has been positive for the markets. Infrastructure spend has been maintained. The fiscal deficit goes down, which creates some amount of space for RBI to cut, and consumption got a booster. Then, as far as the RBI policy went, it was positive in terms of the rate cut, but keeping the policy stance at neutral was a surprise. We were expecting that they would move to accommodative and acknowledge that now they would be focusing more on growth rather than inflation. And then the press conference commentary, where the governor justified that, saying that there's too much global uncertainty and they've stayed at neutral. That has created some doubt in the market's mind. The third factor today was no liquidity measures being put out. But I would say those are not required to be announced in an MPC. The RBI will always bring in durable liquidity. That is what he said. But I think there was some overreaction. The positive got left out in that one, the rate cut happened. Second, the postponement of project financing and LCR guidelines. Remember, the LCR guidelines meant about 10 to 15% having to be kept as a buffer, liquidity buffer by banks for internet enabled deposits. That would have been a big drag on banks. That has got postponed at least to next year, March 2026 at the earliest. Same with project financing guidelines, where 5% buffer provisions would have had to be kept in under construction projects. That has again got postponed by nearly 14 months at the least. Those were two very big positives that got left out. I think it was a market overreaction of being quite exuberant coming into this RBI policy, that new governor, new stance, and new thinking will come in. New thinking came in terms of a very belated interest rate cut, but I think the RBI bureaucracy stuck to its heels and kept the stance neutral, and we did not see a liquidity announcement. That was the negative driving the markets downwards today. Overall, globally, Mr. Modi visiting US next week is a positive. We are expecting that some amount of defense agreements to be signed, some amount of equipment purchases to be announced by India. And already we are seeing some relief being given on tariffs on US goods. And we should see a shake of hands, which should give some amount of focus to the markets. Overall, not a great earnings season, but the next quarter is starting to look better. And with this rate cut, we will see the rate sensitives do better. So I think today was an overreaction on the banking side. NBFC's funding costs go down almost immediately. Auto, real estate, and banks all will benefit from this rate cut. And any company with a large loan outstanding, like the very leveraged infrastructure companies, they will also benefit from lower rates. And our thinking is 2 to 3 more rate cuts in the rest of the year.
Mr. Bagga, thank you so much for joining us. Let me take the next question to you. And given the fact that over the last few trading sessions that we've been thinking about is that most of the event risk is done. You got done with the Trump admin taking over. You had the Federal Reserve decision that is done away with. You had the big budget that's done away with. Now you had the RBI also MPC meet done. Now, do you think that next event that we should watch out for is the Trump meet with the US president, which you did touch upon it a short while ago? Do you think that's a big of an event to watch out for? Or you think that now things will go on the way it is? Markets are in a consolidatory phase. All eyes will be only on what FIIs do next?
Yeah, to some extent, yes. We are expecting that nothing bad comes out of it. The Japanese Prime Minister meets Mr. Trump today. So we'll get an indication of how things are going. The Israeli PM had a very fruitful meeting with him. So we are expecting that India being the third head of state meeting Mr. Trump, we have got some privileges with him, so we can be optimistic. But, you know, in terms of market moving events with Trump, we are one social media post away from something shaking the markets. That's the part. But the good news is, you know, what is exactly happening? This is an experienced Trump administration which has come in. You have to see on the ground results versus the rhetoric. And what Trump is trying to do, he's trying to grab as much political space as possible before the opposition coalesces together before court orders come in. We saw that on the funding cuts, where with the first court order of postponement of 3 days, they promptly dropped that. Now, some other moves also have happened because of paucity of time. I won't take that. But overall, what are we seeing? We are seeing on one side, Trump will be deregulating. He will bring forward the tax cuts, and he will cut down government wasteful expenditure. On the other side, and all these are good for corporate earnings, and especially financials should do very well. On the other side is the risk of inflation based on a tariff war, which could lead to second order being China depreciating its currency, third order being China dumping its goods all over the world, because China has so much excess capacity, and then you close out a big market like the US with tariffs, it could lead to problems. I don't think any of the worst case scenarios on the cons will happen. There will be via medias found. While on the pro side for the markets, deregulation is happening very fast. He's sacked 16 heads of various regulators, already sent home. Department of Justice, entire prosecution being sent off home. You can expect very fierce deregulation and the tax cuts that Trump has espoused. I think those will get through by June, and markets will react before that. So overall situation is good for the US markets, but it becomes a problem for the Indian markets and emerging markets. Emerging markets have seen about $15 billion go out in the first 5 weeks. US market in comparison has got inflows of 150 billion. So on a base where they got 450 billion in the whole year last year, in just the 5 weeks, they've got 150 billion dollars of inflows. So that is what's happening. Strong dollar, strong US market, strong economy, and strong leadership. The world is gravitating towards that. Emerging markets are seeing outflows. India also, out of that 12, 13 billion EM outflows, India saw 9 billion. So we are getting more than a fair share. But how soon does it reverse? It will reverse when there is some amount of visibility on earnings. The government is tick marking everything. That is very good. RBI did its part. Government did its part. Next week, the tax bill doesn't have any root surprises. That will be a positive again on Monday. And then the Trump-Modi meet, I think if there is any good outcome from that, that could lead the market finding some stability. But the FI turnaround will come with a weaker dollar. And when the global investors start seeing value in coming to EMs like India, for that we have to deliver on earnings, and or we have to have substantially lower valuations. I would say hopefully earnings start picking up from next quarter, and third quarter calendar year, we see a good boost. And 3 to 6 months before that, markets will start reacting. So I would say April, we should see some amount of FI turnaround happening in India.
Right. Actually, I stand corrected there. By mistake, I did say that Trump meeting US President. I didn't mean Mr. Modi meeting the US President. Nevertheless, Mr. Bagga, I got your answer for that. But coming to you, actually, Naresh, and I wanted to get your sense, given the fact that you have this entire rhetoric about tariff now pretty loud and clear. No doubt, there is no concrete action about it. But do you think at this time chemicals look good?
So for now, chemicals have been in a downward cycle, apart from, say, SRF and Navin Fluorine, where there are particular cases in that segment. Overall, the trend for an Atul or a Deepak Nitrite or all the other names where there is participation from institutions, they've been in a sideways to a downtrend. Agrochemical side looks more interesting. We've seen UPL, one which finally turned after 5 years. So I would focus more on the agrochem side rather than the core chemicals.
Coming in on some of these chemical counters, but all eyes will be on Eicher Motors as well, because coming Monday we are expecting the numbers to come by, and this time we are expecting a decent set, because firstly, let's give you the volume picture. This time the Royal Enfield volumes has done pretty well for itself. It's been a 19% jump on a YOY basis. That's been driven by a lot of the exports that the company has done, and 13% 3% is what they have recorded in terms of growth number for the domestic market. Other than that, the average selling price is expected to decline a bit because of the higher mix of 350cc models, and the Royal Enfield margins overall are expected to expand just 60 basis points on a sequential basis. When we talk about VECV, then though the revenue is expected to go up, but given the operating deleverage, the PAT is expected to decline on a YOY basis. Talking about the consolidated numbers, 5,044 crores is what we are expecting on the top line. EBITDA expected at 1,291 crores, while the margins expected at 25.6%. And lastly, on the profit figure, our expectation is 1,173 crores. But definitely, all eyes will be on the management commentary, what they actually go ahead and say about the demand outlook and what are their plans for new launches. We'll have our eyes on that. But Naresh, let me have your take on this one. Eicher Motors, how is this technically placed? Because I believe that Kunal has been constructive on this counter in the recent while. But for you, how is the chart looking like?
So the strongest chart in the whole auto pack has been Eicher Motors. First, it did not correct with the whole market. Second was the first one to hit a new all-time high. We saw it drift back to 5,000. Again went to 55, 5,600, which was the first zone of resistance of the move of the previous range. For now, 5,200 should now act as a base, remains a buy on dips, and the next move could be closer to 6,000.
Move could take it closer to 6,000 odd rupees. Has been consolidating in a quite a tight range, and he too likes Eicher Motors on the technical front. But looking at the markets now, it's been a good recovery from the day's lowest point, and just 30 points of cut is what we are seeing on Nifty 50, and even a good recovery when it comes to the banking index. But other than that, it's Ultratech Cement as well that is holding up quite well. And Kunal, before we wrap, help us with your take on the cement major, because of late a lot of these reports are highlighting that in the month of January as well there has been price hikes, and the price hikes are sustaining. That's the big positive. But how do you see the technical setup?
I think it's one of the strongest name from the cement pack, Ultratech Cement. The stock in the last so there are two ways to look at a chart. When you look at this on a relative basis from the recent highs of 12,000 plus levels, the stock is back towards 11,600 mark. So relatively, the stock is more or less 4%, 5% away from its previous highs. And then when we look at this from a bottom-up approach, the stock from 10,500 has recovered more than 10% to rally back to 11,500, 600 plus mark. Which means on both scales, when we look at this comes out to be one of the strongest name from the entire cement pack. And looking at the way the charts have panned out over the last 2 years, my expectation is that Ultratech Cement could continue to outperform and be one of the strongest performer going forward. My expectation is 12,000 to 12,500 range potentially in the next 1 to 3 months.
Right. Like Shrishti marked that there is a marked improvement for the markets from the day's lowest point. Kunal, do you think this is the effect of you flying those paper planes, the picture on your Instagram, that you think it's helped the markets actually lift off?
I think it has.
Given the fact that it's Friday and you had the Friday fever here in the newsroom at least, so hoping that, because we had a very long week, isn't it? Last week was long. This one is feeling longer, isn't it?
Just one holiday, I think Sunday. But
yes,
then,
just
I
one.
think no complaints because the markets have done pretty well. So I think.
So you don't want this week to end? Is that what you're saying?
If the price recovery is still strong, then of course why not?
Always a bull, isn't it, when it comes into the
Absolutely.
market? Naresh, what's your take? Always a bull in the market?
Always a bull, but I won't like to work on Saturdays.
Mr. Bagga, what's your take? Let me take your take also on this, because come next week, it will be very news heavy, given the fact that you will have that big event where you will have the Indian Prime Minister go ahead and meet the US President. So I'm sure it is going to be an overnight news flow that we'll be watching out for.
Yeah, absolutely. And, it's not only the budget, but the post-budget seminars. So every evening has been talking somewhere or the other. And Sunday I had to go to Delhi for the WOFA 2025. I addressed an audience there of World Forum for Accountants. So it has been a very heavy week. I don't really, and tomorrow we'll be covering the Delhi elections live. So no rest at all. But it is good. At my age, I can't complain. I'm very happy if I get work. As a retired person, I'm happy when I get to work.
All the smiles on the screen is actually the evidence that, okay, we're not complaining except Nuresh. Nuresh, I have to remind you, you were the one who reminded me last Saturday that next year, February 1st is on a Sunday.
Oh, yes.
Chala, at least I can see that smile on your face right now. But if you look at the markets right now, a good recovery, smiles on everyone's faces. Yes, it's been a very long and a tiring week, especially for Shrishti, given the fact that the auto numbers have been pouring in thick and fast this week.
Well, certainly, Cheryl, and looking for Monday as well. But nevertheless, the markets have been kind, really. It's been news heavy. The earnings season was in full swing. But I believe that we are ending the day on a good note because the policy is through. And next week, there are a lot of triggers to watch out for. But quickly, let's, before we wrap this session, let's tell you or highlight some of the gainers that we are seeing at this point in time. Definitely, the metal counters are doing pretty well for themselves. We'll definitely watch out for that. How we can actually go ahead and see this momentum continuing. But this week, the chatter has all been about the consumption basket, given the kind of over 1 lakh crore of booster from the Union Budget announcements. When the consumption is to be pushed, in terms of the tax cut for the middlemen is what we have seen. Let's hear out from Manish Suntalia's view on the consumption basket.
Key takeaway from the budget is consumption. So at the margin, consumption stocks are going to do really well. Because first of all, you are coming out of the budget, with very little expectation, given that consumption stocks have not done well over some time. So, this 1 lakh crore saving in income tax, and if you give it a marginal propensity to save of around 20%, that is marginal propensity to consume of around 80%, then this 1 lakh crore saving in taxes will actually mean a multiplier of 5. If you assume that of that 1 lakh crore, 20% is going to be saved and 80% is going to be spent. So depending on what is the rate of savings, the multiplier could be as high as 3 lakh, 4 lakh or 5 lakh crore. If the saving is 20%, then it's 5 lakh crores. If it's 25%, then 4 lakh crores. If it's 33%, it's 3 lakh. So this is basically going to be felt on consumption-related stocks. And mind you, the consumer discretionary names are going to benefit more since the tax cut has happened on the corporate income tax side, not the GST side.
All right, then, as we wind down for trade this Friday, let me come to you, Kunal, and get your BTST ideas that our viewers can watch out for.
I'll look at two financial names. First one is from the mid-cap arena. It's about Ujjivan Small Finance Bank. That's a chart which is looking extremely attractive. Would look out for targets in the range of 44. Stop loss could be now trailed to 37 since the stock has moved up higher. IndusInd Bank is the other stock which is looking extremely attractive and looking out for targets in the range of 1100. Stop loss at 1060.
All right, so those are the two BTST ideas coming in from Kunal. But Naresh, what about you?
Buy and a sell, buy on Bharti. The stock is broken out post numbers. It looks interesting again for a follow-up move to 1700, 1720. Stop loss at 1650. Second is a sell on Marico after a strong recovery has given a breakdown. Stop loss at 650, target price of 635.
Okay, a sell call actually coming in from Naresh. On that note, thank you, Mr. Bagga, as well as Naresh and Kunal for being a part of the show. We'll see all of you next week. Yes, it's going to be a good working 5-day working week for all of us. But